Commodity producers, as Deborah Costrin was reporting earlier, gold prices, silver, all falling, as well as oil. Well, my next guest can tell us a little bit of what investors should be looking for in the commodity markets. He's an expert. We've got Frank Holmes, Chief Executive and Chief Investment Officer at U.S. Global Investors. He's got about $3 billion worth of assets under management, and he joins us now from San Antonio, Texas. Frank Holmes, good to have you with us. You're looking great. So tell us about this pullback in the price of silver, the price of gold, and the value of a barrel of oil. Short term?
Pimm, it's all healthy. It's had a spectacular run, and we're going through in the oil and energy world the shoulder month. I think it's just healthy to get to oil to pull back. I don't see a big change in the commodity demand. There's still many trillions of dollars of infrastructure projects on the books by governments. Recently, last month, Saudi Arabia announced a $100 billion housing project. I think that that's significant because to build out this project, they basically need $100 barrel oil so if they don't want a deficit. So I think that this world will continue needing commodities. But it's nothing like silver. But silver, it's had an incredible move. And on mathematics, this is one of the biggest moves in 10 years of data points over any 60 trading days we've seen. So it could easily correct to $30.
Correct to $30. Why is that? Because the people that are in the silver trade right now, they're not long-term investors? Why would this pullback happen?
I see that the long-term investors are in ETFs. But I also see that the futures market, there's been a huge run, and that's leveraged 10 for 1. So what we're seeing now is changing the margin requirements, and what that is forcing liquidations. And what investors really have to differentiate is between volatility and actually losing money. Volatility is normal in these markets. Volatility are those who have big leverage. Leverage for their houses that took place in 2008, or leverage in futures market. So this is what investors have to differentiate.
Now, you mentioned changes in margin requirements for trading silver. Tell us about that and how that plays into the psychology of the marketplace, because if prices drop even a little bit, some investors, they've got to come up with more cash.
Yes, and they usually lick their wounds and take losses. It's amazing to witness over and over that whenever you have these exponential moves like silver has just gone through, you'll get many speculators coming in and they want to have more leverage, so they go to the futures market. And with that, that's leverage on average 10 to 1. As soon as they change those rules and want more margin, there's forced liquidations. So some people are going to be hurt. Speculators will be hurt that came in the past 20 trading days.
All right, Frank Holmes, I know that you've been traveling the world, scouring the landscape for good investment ideas. Let's start with Medoro Resources. Tell me about Medoro, and how did you come up with this idea?
Well, Medoro is in Colombia, and Medoro has this massive deposit that over 10 million ounces at 1 gram. And it's very difficult to scour in the world for big mining companies to find 10 million ounces. It has some logistics to get through and moving a town and get through further development of this project. And it'll most likely be bought out because other companies in the marketplace that have this 10 million ounce deposit, this grade, trade at 5 to 10 times the valuation. Now, Medoro is being taken over by a company called Gran Colombia. Gran Colombia is a very high-grade deposit, about 10 grams of gold per ton. Now, Barrick, everyone knows about Barrick Gold, its grade is about 1.5 grams per ton. So when you put these two companies together in Colombia, you're going to be producing over 100,000 ounces of gold, very high grade, and you'll have in the future, in the next couple of years, to develop 10 million ounces to increase production to up to 500,000 ounces a year. And that would make this stock have the potential to quadruple.
What are the risks, though, Frank? You mentioned those logistical problems.
Well, the risks are always the price of gold. The risks are, right now, the most technical risk that I see is rain in Colombia. It's just had a lot of rain and delays the execution of this model. But the new president to come on, you know, this is a person who's an engineer that's built mines at 12,000 feet in Peru, has been involved with the largest gold mining company and producing mine in Latin America, Yanacocha. The CEO has tremendous political savvy, was a minister of culture, who knows how to navigate through any of these technical issues. And in emerging markets, CEOs have to truly appreciate communities and cultural aspects of the workplace, or mines get shut down. So I think this new combined company has great management, a massive resource base, and I think once this merger's through, it'll go through a re-rating. And the best way to participate is you buy Medoro, because you're going to get a share of Gran Colombia, and you're going to get a warrant that gives you another call in 5 years of the growth potential of this new entity.
All right, just as much as what? As you said, 500,000 ounces of gold production annually when this gets ramped up for Medoro Resources, correct?
Correct. Coming from a base, there'll be over 100,000 ounces, but Pimm, very high grade. 10 grams is extremely high. And to have that potential, when you take a look at its peers, they trade at 10 times that rate. So I think it provides little downside as a value investor and lots of upside, because I believe that gold will, in the next 4 or 5 years, has the capacity to double.
Gold is going to double in the 4 to 5 years. All right, Frank, so what about closer to home, gold mining in South Carolina? Romarco?
Romarco. Diane Garrett is a PhD in mineral economics, a CEO, and she's done a remarkable job in expanding that deposit with huge results. This would be a new gold mine coming on stream where unemployment pushes close to 20%. I think it's just a great story. There's good news today as they're better defining this deposit, going through all the permitting process, lots of drill hole results to come. So I think this is the type of company that will get bought out as you get very close to that production.
All right, so Romarco Resources, Medoro Minerals. Tell me about SandRidge Energy. I want to get your thoughts there.
There's a spin out, and it's a royalty trust, which we like, and has a nice yield. It's appreciated nicely since it's spun out as basically like a quasi-IPO. But you're getting close to an 8% dividend yield. And I think that's the best way to buy energy stocks, is to get paid while you wait. And as energy prices over the next 5 years have the potential to also appreciate 50% to 100%, I think that it bodes well to have income while you're waiting through this price appreciation.
All right. Now, Frank, I have to ask you, because I know that you're originally from Canada. I know you know a lot about the resources in Canada. Tell me about the election that was just held and the victory for the Conservatives. What's that going to mean for investors who want to look to Canada?
Well, the Prime Minister is the ultimate schnorr, and he's the most frugal guy in the world. You know, it's
that's
some
a
very
technical
funny
term for you, Frank Holmes, isn't it?
Yes, it is. It is. But he's just, you know, he's very, very frugal, and has always been, as he had a minority government, has now gone to a majority. How he has ministers fly around, what they spend money on. So he's this sort of, there's a movement in America to watch fiscal spending. We've seen it in some states, changes take place. So I think that's a big change that's taken place in Canada, because 20 years ago when I left, it was just spending money and wasting money everywhere. So I think it's a positive overall for the country.
All right. Well, we're going to leave it there, but I'm glad you introduced this word to our lexicon, Frank Holmes, all the way from San Antonio, Texas. Well, before we go, Frank, let me just get your thoughts then on investing in Canada. I mean, do you think that that's an area where more investors ought to be putting more of their money?
Well, we saw the Canadian dollar being extremely strong, and I think it's important, Pimm, when you take a look at a sequence of events that took place in 2005. Russia made a commitment to take 5% of their oil revenue and gas revenue and reinvest it in gold. They started buying up all their own gold supply and then tapping the world markets. And then last year they said they're going to start diversifying their foreign exchange in the Canadian dollar. And the Canadian dollar has been very, very strong. So if you have strong energy prices, not only is Canada the biggest exporter of energy to America, it's also, you're seeing other countries like Russia taking its petrodollars and recycling the Canadian dollar, which has an impact and confidence in investing. Now, Canada has more resource-listed public companies on the Toronto Stock Exchange than all the stock exchanges in the world combined. And I think that's a big reason why London's trying to buy the Toronto Stock Exchange.
I got to leave it there. Frank Holmes, U.S. Global Investors, coming up.